Hello everybody, this is David from Ripe Trade, and I just wanted to do a quick follow-up to yesterday's video based on the RSI setup in the NASDAQ. I had mentioned yesterday that I would be buying the close if the 3-day RSI closed below 15. That didn't occur at yesterday's close. You could see the upper left-hand corner of the screen, the RSI was above 15. Today, however, it did occur. The RSI today closed at 6.79, so today's close was a buy based on that system. I also wanted to touch base real quickly on some more reasons why I'm bullish the market right now. I'm going to take a look at the S&P futures right now, and you could see the S&P futures are way oversold based on the RSI. The McClellan Oscilator right here, which is a measurement of breadth in the market, the amount of stocks up and down, is way oversold right now at minus 272. That is an extremely bearish breadth reading, which in turn means it's bullish for a market bounce. When all the stocks are oversold, they can't get any more oversold, so the markets usually bounce. One other reason, which is a fundamental influence on the market, is the bond market. If you look at the bonds right now, this is a picture of the 30-year bond market. You could see that bonds are way overbought right now. The 3-day RSI is at a 95. Okay, when bonds get expensive, it makes stocks more attractive. And then I'm going to pull up the back testing software right now and show you what historically trading off of these scenarios would look like. For my exits, I'm going to use a bar since exit, which is a time-based exit. You're going to sell the market 5 days after you entered the trade. The other exit is a profit-taking exit, which is called the Larry Williams bailout exit, also known as the first profitable open. This means that you are going to exit the trade on the first profitable open. If I buy the market today at 100 and tomorrow it opens above 100, I'm going to sell at the open. If it opens below 100, I'm going to hold it until the next open and sell the market on the first profitable open or in 5 days, 5 trading days. All right. These are long entries. This is the criteria that I just explained. The 3-day RSI right now is at 11. So the rule here is if the RSI is below 12, we're going to buy at the market. All right, run that rule, and you could see this is based on trading one S&P futures contract. It 205 times the S&P futures closed below 12, and you would have made money 82% of the times with the exits that I explained. The average trade was $630 per contract. All right. The other criteria that I mentioned was the McClellan Oscillator. McClellan Oscillator right now is minus 270. All right. So historically, if we bought the market when that occurred, it only happened 18 times. But wow, look at that average trade. $3,481 per contract. Your win rate was 83%. All right, you made money 83% of the time, but that's a huge move in the S&P, $3,000 per one futures contract. All right, and then the fundamental influence that I mentioned was if the bond market is overbought, the TQ right there represents the 30-year bond futures above 90 on the 3-day RSI. Historically, if we bought when that criteria was there, it happened 267 times. The average trade was $589. In the S&P futures, your win rate was 80%. All right. Now, if you ask yourself, what happens when all 3 of those criteria are there, like we have right now? This is the rule. All 3 of the criteria. The RSI, the 3-day RSI is less than 12. The RSI in the bond market is over 90, and the McClellan Oscillator is minus 270. When all 3 of those occurred, there was only 4 occurrences, but look at that S&P futures contract, $7,286. That's a huge move for the S&P. These are the occurrences. These are the 4 occurrences where that happened. All right, just happened back in May of 2010. And these were huge moves there. So that's it. That's what we've got right now. I think the market is a buy at the open tomorrow. If you're not already long, I think it is a pretty good risk reward trade to get long right here. If you'd like to take a look at some of our other strategies, please come visit our website at ripetrade.com. Again, that is, I'm going to pull up that web address right here. It's ripetrade.com. We've got a lot of other strategies that we'd like to share and teach you some more about some of the things that we're doing at RipeTrade.